Ladies and gentlemen, my name is Greg Michalowski from ForexLive.com. This is a Forex technical analysis. We're going to take a look at the euro versus US dollar. As it starts the week more bearish, can that bearishness continue? We'll see. Let's take a look at the daily chart. I said the week started more bearish, and we actually started the week at the high for the week. On the first 5 minutes, the market started to come down and rotate down. In the London or European session, that's when the momentum started to develop to the downside. As New York traders were coming in, however, we found a bid and we started to move back to the upside. We did find resistance against the 50% retracement of the day's trading range at around the 107.66 level, double top up there, and that has sent the market back to the downside, falling below the 100 bar moving average in the process. So off the intraday chart, that's what we're looking at right now, a little bit more bearishness from the euro versus US dollar. Now let's move a little to the hourly chart and see what that's telling us. On the move to the downside in trading here in the European session, we did find support against this blue line. This blue line represents the 100-hour moving average and found buyers against that level. As mentioned, the 50% retracement of the day's trading range was this high right here, and we're since moved back down and looking down to test that blue level again. That's going to be key going forward, folks. That's the 100-hour moving average. We need to break below that level in order to push further to the downside in trading, not only in the new trading day, but in the week going forward. We need to get and stay below that 100-hour moving average. If we do go below that level, we do have another key level here that I want to bring your attention to. That is the 50% retracement of this move to the upside here from our lows on April 13th to the high that we saw on Friday's trade. The 50% comes in at the 106.84 level. Also at this level is a 200-hour moving average that comes in at 106.84 as well. So not only do we have the 50% retracement, but we have the 200-hour moving average. That's always an invitation to buy on a dip, at least on the first test. If it holds support against that level, we're going to look for a move back above the 100-hour moving average to confirm that the low is in place. If it holds that level and rotates back down below that level, look for stops to be triggered and for the bearishness to continue in trading this week. That is going to be key level number 2 on the downside. So key level number 1 here, key level number 2 here against 50% and 200 bar moving average. If we can't get below the 100-hour moving average in the new trading day, look for a rotation to the upside, and ultimately we're going to need to get back above that these moving averages here on the 5-minute chart, and also above the 50% of the day's trading range. That will be the week's trading range, and we'll look for a rotation higher from there. So that's a look at the euro versus US dollars. We finish up the first day of trading and look forward to the week ahead. Good fortune with your trading. My name is Greg Michalowski for ForexLive.com. Bye-bye now.